Hello and welcome everyone to Gold Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So this week we have back-to-back events for you to capitalise on. On Wednesday, we have the interest rate decision from the Federal Reserve. On Thursday, we then have the Bank of England interest rate decision. On Friday, we have non-farm payroll data. And this is all topped off next week with the midterm elections on Tuesday, the 8th of November. This explosive cocktail of events, yet again, is going to provide you plenty of opportunities to trade this volatility. It's no surprise that at the moment, how to trade is one of the top trending searches on Google. And with that, Bloomberg have stated it best. 1 in 2 people are now looking to trade to beat inflation. This year we have crisis after crisis. We've had an inflation crisis, followed on by a supply chain crisis, followed on by a recession crisis, followed on by an energy crisis, and now, of course, we have a currency crisis. All of this that you can capitalize on massively if you know how to trade. Now, already over the course of this week, we have seen very volatile moves here with platinum breaking all the way back out towards 2-month highs. With that, the game plan has remained the same. In fact, on platinum, we took the opportunity yet again on Tuesday to bank 1,000 points profit. Now, with that, we've also seen gold find support again at the 1630 level. Each time we're revisiting back down towards that zone, very quickly gold is having these slingshot moves higher. Now, this, of course, could all change after the FOMC statement, after the Bank of England, and after non-farm payrolls. But at the moment, that has been the playbook to keep time and time again taking advantage of that range-bound volatility that we are seeing on the metals. Now, at the start of the week as well, silver prices, they broke out to the highest level in 1 month, alongside, of course, platinum breakout to 2-month highs as well. We remain in our 2 positions on silver, where we've been able to benefit so far from over a 4% breakout to the upside over the course of this week. Not only that, we talked you through last week where we built into multiple positions on the dollar, breaking out to 1-week highs on Tuesday, and with that, all of our dollar positions are now very nicely in profit. In fact, our main job now on the dollar is to start scaling out of more profit on this market. As everything we discussed with you last week, to expect risk off as you transition into the month of November with a number of major policy decisions coming from central banks. That's all played out. We talked you through buy opportunities last week between the 109 to 110 level. The dollar index is currently trading at the 111.50 handle. So I do hope that you've been able to also capitalize massively on the volatility, on the appreciating dollar. And with that, you've also been able to bank a windfall amount of profits on the metals, which have broken out significantly on the very first trading day of November, as you've seen fresh capital enter into the market for a new month. So, of course, imminently, again, we've got the FOMC statement on Wednesday. Thursday, we've got the Bank of England, Friday, non-farm payroll, and then moving into next week, the midterm elections. So there's going to be just back-to-back opportunities for you to capitalise on massively. So I do hope you watched last week's report, and like us, you are now in a windfall amount of profit on building into multiple positions on the dollar index, which is currently trading all the way back out towards 1-week highs. And again, this comes down to utilising a research-driven approach in the market, learning and understanding the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles. Alongside that, utilizing the intermarket correlations, the ratios in the market, the key areas of liquidity. Alongside that, the capital flows, the narratives in the market, the macroeconomics, the fundamentals, the geopolitics, and of course, further align that with data, statistics, market intelligence, and how the hedge funds, money managers, banks, and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, ditch those outdated technical analysis strategies and outdated gimmicky technical indicators and learn the professional research-driven approach, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.